Good day, traders. Stacey Burke from Stacey Burke Trading. Following up on our last video on the most important times to trade, we talked about the importance of the Asia-London overlap, London Open, Asia close, and the New York Open, London close. Essentially, there's three major time frames: Asia, Europe, London, and New York. And I talk about the importance of really focusing in, especially for retail traders, to those time frames. And the reason why that is, and you can go back on each one of your charts. I've had a few people email me and ask me for the indicator that puts the numbers on. I just plot these on manually. I know what time these are New York time charts. It's important to understand that the Asia close, London overlap, there's always going to be a move. Now, primarily what you see in front of you is I use the 20 EMA on my end of day and on my hourly charts. What I look for is some simple basic setups, but it's important that I look at the last hour into the Asia close and the London Open, first part of the London Open. I look for particular certain setups, and one of my ideal setups is exactly like this right here, the bull candle in a down market at the Asia close London Open. And again, people have asked me what I look for. What do I mean by predefining my risk? I look for something at the top of a range that has pulled back or pulled back into a support or demand zone. I can predefine my risk by one candle. And another question I received was, what do I mean by a rectangle? Well, anything that goes sideways into a trading range that gives me the opportunity to sell high or to buy low, depending on where that market is consolidated into. But this is an ideal setup, but it's the time of day that is the most important for me. Now you see later into the London close from this previous session, and I talk about, if you're into a profitable trade, look at when the volatility is going to start to dry up, and definitely at the London close. You can go back again and check your own charts, but you want to be either taking profits. But what I look for are bull candles in bear markets and bear candles in bull markets, because the most important thing to understand with that is that there are traders that are going to be trapped, and above and below those, below a bull candle in a bear market, you're going to have stops, and above a bear candle in a bull market, you're going to have stops. And that market, when it's in a trend, is going to hit those orders, and often will have an asymmetrical expansion of that range that it's just broken out of. Now, on my hourly charts, I look for a minimum of a 2 to 1. And that goes for the larger rectangle. But this is an ideal setup because I've got a pattern within a larger pattern that I can then look at expanding the range. And then I look for, again, the time of day. So this is an example of where once into a trade, you would look to be possibly trailing that on a shorter time frame. Now, I like to enter these trades when I see this pattern present on a smaller time frame. So I would look for a reversal or a sell high pattern on my 5-minute chart. Now again, once this market moves past a certain point on the shorter time frame, usually 2R on a 5-minute chart, I will go to break even. Once that market has cleared the larger rectangle, we're definitely at break even as a worst case scenario. And there's two ways that traders can short this. They can short it into this bull candle that the market broke out from the previous day. So again, bull candle, long traders that are trapped now. So once the market trades up into that, there may be aggressive traders who will look to short that somewhere up inside of that candle's range. But again, that's the maximum stop loss. So once this market moves and it has an expansion of that range, again, 2 times the expansion of that rectangle gives traders on a shorter time frame, maybe 5, 6, maybe 7 to 1 on a 5-minute chart. And again, once that 2 a.m. to 5 a.m. New York time frame sort of starts to expire, if we see this aggressive price movement down below, you'd be trailing that on a shorter time frame to exit that if you haven't already taken profits. As we head into New York, just to re-edify, that first hour is the trading range of the session. So we have traders are, you need to understand that there's the first hour of trade is either the trade or the trap. So in this particular case, the pre-open, the Asia overlap with London, that was the trap. The breakout of the London candle was the trade. So traders who even might wanted to have participated in this breakout at some point, again, even at 1 hour's movement, would have been going to break even and possibly trailing that on a shorter time frame to take profits. So as we head into the New York session, the 8 o'clock is the pre-market open. The 9 o'clock candle, again, we're back up into a supply zone. Aggressive traders on shorter time frames would have looked to have sold that back down to the original breakout from that London session. So we've now got two-sided trading until the next day. But again, it's important to understand basic patterns. So yesterday, again, bull candle in a downtrend at the Asia open. The Asia closed London open. Again, shorter time frame, looking for a selling pattern on a 5-minute to re-enter that trade. And again, let me just get rid of this. We'll get rid of this and put that. Now we've got a larger rectangle. That traders can look to possibly trade and profit from. So we've just broken out from the Asia close long, but at this stage I still that filled the gap. We'll just put this on here again as well. That filled the gap from yesterday's London bull candle breakout again. So a bull candle, trap traders, aggressive long traders who have gone into the market, stopped out, filled orders, aggressively moved south as we headed into the US Open. Now we see a buy low setup on the hourly charts. So we're looking to see where a bear candle may have gotten trapped. That first candle, the second hour of the US Open, broke out, pulled back, filled more orders, and continued. Consolidated into a trading range. Whenever we see a trading range like this, that's a high probability that there's institutional order filling happening. And the next likely spot that this may continue up to is again to fill the gap where the breakout traders from yesterday's London Open were short into the market. So it's important to understand where those gaps are, that those are orders, and the market's going to seek liquidity. And so as the market traded through Asia, we saw an attempt to again go lower that was thwarted, weak, another retest, second mouse, didn't go any further. We saw the bullish breakout here, a pullback into the Asia close, and then a breakout into the London Open. So again, hopefully you got some value from that, traders. Put your times on there. Stay with the overall trend, however you determine that. Keep it simple. Look to be able to predefine your risk. So even if you were shorting any of these candles at any point during the market, even on a shorter time frame, again, you've got a 1-bar stop maximum on your hourly charts, and that's important. It's imperative to be able to predefine your risk and have some kind of range expansion as a potential profit target. And as I said on the hourly chart, it's a minimum for me of 2 to 1, 2 times the breakout candle. And if you're able to enter that in on a shorter time frame, you can get your return maybe 5, 6 to 1 in terms of your reward to risk. So put the times on your markets. If you're trading intraday, pay attention again between 2 a.m. and 5 a.m. and 8 and 11 a.m. New York time. We'll see what happens today. Stay disciplined, traders. Stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.